Hello everyone, welcome to our new webinar. We are again streaming on June 16. It's Monday, so hope everyone had a wonderful weekend. Just let me know if everything is fine. If you're watching this on YouTube, here you will find on the right side, you will find the chat box. So if someone can type in anything, that would be great. Anas is here. Poor Bat is also here. Mohammed is here. Okay, so looks like that we are ready to go. By the way, if you didn't click like yes, then please do it now. Okay. Now, as you know, we have a new risk in the markets. Let me just share my charts. So we have a new geopolitical risk. I mean, this risk has been somehow on the horizon for quite some time, and things just went worse over the last couple of days. And of course, what we are seeing is that there was some tiny move into safety, nothing really big or dramatic on the markets yet. I'm quite surprised, but we were seeing quite a strong push to the upside on energy prices after this escalation on the Middle East. And I think that since we broke, as you know, last time I said that very important for that week should be around $66-67 per barrel for crude oil. And what we are basically seeing now is that market moved well above that level. So apparently we are in a new cycle, which I believe can be corrective. Okay, so I still think that energy will eventually move to the downside. I have been expecting this break out of a triangle at the start of this, from the start of this year, but now it looks like that we could be now in new phase, which will be unfortunately some kind of a sideways price action, but could be a very big swings ahead because of this geopolitical tension. So what I would be tracking here is this ongoing corrective ABC recovery. I can see that someone just earlier today, someone said on Bloomberg that maybe crude oil will go, is a risk that it will go back towards $200, but not back towards, but towards $200 per barrel. But we have been reading very similar and hearing very similar stuff back in 2022, 2021. And you know what happened later on. So I just think that it's very important, maybe just trying to focus on more closer targets rather than calling some crazy numbers from here. So my guess is that that was a very nice bearish reversal, impulsive decline, and that we are now in a free wave recovery, which can take us back towards $90, maybe even 95 or 100 would be the very important resistance. But if you look here on maybe on a higher time frame charts, I still think that this correction that is underway from 2022 highs is still not finished, and that we will be just chopping around. And as I said, maybe this wave will be a bit tricky to follow here over the next few months, because we clearly put in some low in place, but definitely I'm not seeing a continuation higher, but rather just a corrective price action ahead. It will be very interesting and important to keep an eye on inflation data, which will be out in July for June, because obviously we are seeing some volatile moves on crude oil in June, and if prices will stay in this range or even slightly higher, of course this will put some pressure on inflation. But when it comes to crude oil, and what I think that energy could still see a limited upside, and that's just temporary recovery that obviously could last a few months, is because of commodity indexes. So we are tracking a few commodity indexes here. Here we are looking at the equal weighted commodity index ETF. It's basically still ongoing recovery. You can clearly see a very nice and clear 5-wave drop followed by a counter trend movement. So this is the equal weighted, and it's much more important maybe than some of other indexes which are more impacted and driven by energy prices or metals. But this equal weighted, I mean, it's a pretty straightforward wave count. As I said, 5 waves down followed by a counter trend rally in 3 waves. So very nice resistance at 21.50. Then you also have here commodity index fund Also, what we are seeing is potential leading diagonal, and now maybe we are in a flat formation. So again, limited upside, but obviously not yet in the next few months. Looking at Goldman Sachs commodity index, also very nice, 5 waves down, now a counter-trend movement. So all suggests that we are just in a wave B rally, and that obviously I will be looking for a new reversal to the downside, hopefully still sometime this year. Same thing with Bloomberg's commodity indexes as well. But now we are in this phase of a correction that, as I said, which could last, but eventually these energy prices, I think, still could come down, maybe even at some point close to $50 per barrel. Now looking and going forward, as you know, dollar has seen some recovery last week. I mean, it didn't really see a recovery, it just stabilized after Israel attacked Iran, and we have seen at the same time slight push to the downside for a new correction on stocks. But I mean, everything seems like it's totally normal here, and treasuries, in my opinion, are still somehow sideways. I'm not really sure anymore if that was really end of a wave 5, or maybe we will be just chopping around for a wave 4. Somehow I really still love the idea that maybe we are in a bullish triangle here on the yields, but we are still missing this wave E. So at least in the next few weeks, maybe if Fed will not give us any kind of a hint what they will do on Wednesday, I just think obviously that they will stay on hold, because inflation actually came slightly to the upside from 2.3 to 2.4, less than expected, but still it came higher. Also, jobs are still fine, so obviously it makes sense maybe that they will stay on hold, and as long as that's the case, maybe the US yields treasuries will just chopping around here. Looking at the dollar, here we have a very basic actually technical chart. I think I shared this one in the past when I think I shared it on Twitter or somewhere, on X, sorry. So basically what I'm looking at, I'm comparing the current price action to the one that we have seen back here at the end of 2024. As you know, sentiment back then was very bullish for the dollar. It was extremely bearish for the euro, and we have been warning back then that this sentiment at some point will also change. I know that COT data was also showing extreme pessimism based on positioning on the euro, and I'm not really surprised that all of these cycles actually changed. And what I see right now is that current sentiment down here is very similar to what we have seen experienced up here. Okay, and also if you look from technical perspective, we had a broken trend line resistance, we retested it as a support, and then we have seen push to the upside. Now that's very important, because normally when you see first push to a new high and then market reverses, everyone will say, okay, that's it, market will go on the short side. And then when market brings a new high, then they will say, okay, that's the real trend, we should stay bullish. But then unfortunately that's the final piece of this bullish impulsive run. And now we have something very similar on the opposite side. Okay, someone were already trying maybe to call a bottom down here, since we have seen this some kind of a stabilization on the dollar. But now when we are printing a new low, even more traders, investors will turn bearish on the US dollar, and that's something that we have to consider going into the second half of this year, that you are in the final leg of this impulsive cycle from that high. It doesn't mean that dollar will bottom right now, right here. I'm just saying in which stage of the Elliott wave pattern we are. Of course, fifth wave can always become a bit more extended, and by the way, we still have this C to A equality targets around $94, $95. So you just have to keep in mind that whenever there is a fifth wave unfolding, that sooner or later this trend can come to an end, and that you minimum should expect a free wave retracement or some kind of a stabilization. Okay, so I'm not targeting for any kind of a wave free very strong sell-off here. I just think that when we go into the summer, I know that summer months can be very slow. Maybe there will be some kind of a maybe stocks will be somehow trapped, same with treasuries, between geopolitical risks that we have now on the Middle East, and maybe there will be some trade deals that will be successful, maybe with China, and everything will just looks how great they are making those deals, and markets somehow or sentiment could be trapped between these two events, so geopolitical risks and tariffs. And maybe that's something that will define some kind of a choppy price action or sideways price action going into the summer. Okay, so just keep in mind that if you are positioned short US dollar, that maybe there is just will be very important maybe to keep an eye on the intraday wave structure as well, to identify whenever we will have any kind of a real bounce that could potentially mark end of the fifth wave. But as I said, for now there's still room for more weakness. If you look here on 4-hour time frame, basically what we are already seeing is the potential wedge shape. Okay, there's still some chances that I could label this as an ongoing bearish impulse that is just in the middle of the development, but the whole wave structure and the price action just simply tells us that bears are somehow still here, but they're losing strength because of those overlaps. It's completely different story compared to the previous very strong drop, and whenever that's the case, it could signals that yes, maybe some kind of a strong support is not that far away. But even an ending diagonal, if that's really the case here, this ending diagonal is still I mean, it's still incomplete. It should be structured by 5 waves, so maybe that was a wave 1, wave 2, wave 3, wave 4, still very nice resistance, then obviously could be seen around the upper trend line, and then you will see wave 5 push to the downside here. Now looking at the euro, obviously very similar stuff here. We have 5 waves up, we are in a 5th wave here, so possibly there will be some resistance. Now if we look at the Elliott wave impulsive channel here, the first resistance to watch for 5th wave is that you connect the dots of a wave 2 and wave 4, and then you put the parallel trend line either at the top of a wave 1 or at the top of a wave 3 if wave 4 is normal distance or similar compared to wave 2. But here you can see that wave 4 was a dip deeper. So I think that the first resistance that matters is around 1.7, then you have 1.18, where possibly we could see limited upside. Also notice that we already have a divergence, which is very common between wave 3 and wave 5, and normally you spot these potential late stages of this recovery. And if you look at the 4-hour time frame, to give you some levels where I would look for a top in place, if we start falling aggressively back below this trend line support, and at any point we see a daily close below 114, then I think that we are done. But for now, as I said earlier, there is still a chance on the dollar to count this as an incomplete bearish impulse, and also I believe that we could be trying to label something similar here as well. Okay, so that could also be the case. Okay, so for now it's still an uptrend obviously, but because we are in a 5th wave, because we know and understand how the sentiment works up here, of course it's not bad to be just to be aware rather than and prepared rather than be surprised if some significant trend in changes would show up here. Also, what's important is to maybe to keep an eye on the German US spread, okay, rate differential, and you can clearly see that there is a very big divergence at the moment between a spread, German and US yield spread and the euro dollar. You can clearly see that a correlation is not there, and it means that, who knows, maybe the US yield will be moving up more than German US yields. Okay, and this obviously means that the US dollar could be much more attractive compared to the euro, especially if we also consider that the ECB is saying that there can be at the end of the easing cycle. Okay, and and as you know, Fed still did not cut rates. Maybe they will do it later this year, and maybe that would be a significant trend changer for this market. But obviously we can see that if you look at the spread here at the bottom of the chart and the euro dollar at the top, here we had a very similar cycle tops and cycle bottoms, but now there is a massive divergence going on, and once again it's a very important maybe indication that we could really be trading up here with the euro dollar in a 5th wave. Looking at cable, Cable is also having some serious divergence here. Not really sure that we are in that we are already putting in a top of a wave 5. I still think that there is room for more upside, but even here you can see that prices are struggling, and definitely can be some kind of a wedge formation, especially if at the start of the week we will see our new highs. Let's say earlier today we see cable at new high. I just think that then on Tuesday, Wednesday, you could see this price action, these flows completely reverse. And we have been discussing about that plenty of times, that whenever you see very sharp moves, explosive moves on Monday, then those flows can be reversed. Also keep in mind that UK inflation data, this one will be released I think on tomorrow or on Wednesday. The expectations are 3.3 from 3.5%, but still maybe this will be the major, should be the most important data ahead of Bank of England's rate decision later in the week. They are expected to be on hold, but that's why maybe this inflation data will be the most important mover for this pair in the next few days. Looking at Aussie, Aussie somehow is still not coming out of this consolidation that we've been discussing last week, but I still think that there is a very nice upside potential. I think that if we finally see a breakout this week, this could be very significant for commodity currencies. And keep in mind that maybe that's because recently or over the last few months, weeks, maybe you noticed that pound, euro, Swiss franc were doing quite well, while commodity currencies like Aussie, Kiwi were holding back a little bit. So I still think that whenever we will see this risk on trade resumes, that and we see back normal correlations coming back, and maybe when these trade deals are behind, I just think that we will see a massive move to the upside on those commodity currencies. Mexican peso, by the way, is doing already very, very well, but I still think that Aussie and New Zealand dollar could catch a bit here and could catch and make some very interesting moves across the board, in my opinion. So rather than focusing maybe on the euro dollar for more upside potential, I just think that much more attractive setups could definitely be on commodity currencies versus US dollar, like I said, Aussie dollar or New Zealand dollar. And here we are still trading above these moving averages. It's I believe 200, 150 moving averages that I'm tracking. So whenever we are trading above them, obviously that's a clear indication that we are in an uptrend. And even if we come back to the downside and we retest those averages, I still think that would be quite interesting and massive support here. And looking at the latest wave structure, still could be maybe that we are in some kind of a triangle here for late stages of this complex sideways price pattern. So I would be expecting a push to the upside. Hopefully we see some clearer breakouts very, very soon. Now looking also on dollar yen, this one keeps chopping around. I said that we could be in a triangle basically at the start of June when we were trading down here, because I spotted 5 waves up from that swing lows, and now still since then we are just chopping around. But notice that we can already have A, B, C, D, E legs here. Okay, so for this week it's very important to keep an eye on potential bearish developments. Keep in mind that tomorrow we possibly will have some volatile moments. BOJ will announce their rate decision. I think that they mentioned last week that they see still inflation risks, and maybe they will somehow try to deliver any kind of, they are expected to be on hold, but any kind of a hawkish views obviously could be much easier for the pair to finally to break down. If you see a daily close below 142.77, I think that wave C will try to attack 141 region. On the upside, if the upper trend line is broken here, okay, if I connect these dots, then the resistance still very important will be around 146.10. Now this one is also very interesting. It's ASEAN, since I mentioned Australian dollar earlier, And I think that we have, at least from a technical perspective, we have some, hey Tom, we have some very clear price action. What's the most important is that we have a broken trend line resistance. We retested these supports back from March 2023. We have seen a very strong, massive rebound. We successfully broke this trend line, and this trend line already retested the support for once, well, at the end of May, and now maybe there will be another retest, especially if maybe dollar yen would really push slightly lower, or if stocks would make some kind of a deeper retracement in the near term. I just think that if we get some lower prices, 91.50, $90, that could be a very attractive, very interesting support. Also, if you take a look on Australian dollar versus Japanese yen from head and shoulders perspective, old school stuff, you can clearly see very nice left shoulder head, and now possibly we are in the right shoulder. So very important resistance here on around 96. But because of an Elliott wave principle, I just think that this neckline here around 96 could really be taken out. Okay, now those who are just tracking those patterns from Elliott, from head and shoulders or basic technical perspective, they would obviously say there is no major move to the upside unless the neckline is broken. That's true, but if you have those Elliott wave skills, then you can maybe do a combination with old school technical analysis. Then maybe you will be an advantage here, and you can expect a breakout, because we certainly think that this is just a correction within this new strength that, in my opinion, will take the pair higher. By the way, guys, if you didn't yet, please make sure to press a like, okay? Thank you very much. Now, looking at euro versus Aussie. So, as I said earlier, euro dollar is, if I look back at those charts once again, have seen a pretty strong and extended move to the upside. And I just still think that even if dollar will continue to the downside, that commodity currencies, as I said earlier, will also make a comeback. So we can already see euro Aussie making a very nice, very strong reversal back from those April highs. And back then, when we have seen a very strong and aggressive move to the upside, we also held the webinar like each Monday, and we said that don't get confused by these very strong moves, especially at the beginning of the year. There will be flows that will change through the course of the year, of the day, of the week. Okay, nothing moves just in one straight line. And in fact, back then we spotted that this was most likely the late stages of this current bull cycle. And what happened quite quickly, actually, after I push this out of a triangle, is that market reversed lower. And I still think that we have now some very beautiful development right now, right here. Notice that market came back towards this 1.714 bearish level, and currently you can see only 3 wave rise from that lows. Now, in Elliott wave terms, this normally suggests it's a corrective price action. That's one thing. The next thing is that you have a wave C that already retested the upper side of this channel. So I think that there is potential bear flag developing, and that there is a lot of more upside potential, downside potential here on the euro Aussie in the upcoming weeks. Looking at gold, as you know, we shared some free analysis also on X last Monday, and we said that gold, basically that's the analysis right here. We said that gold is trading at a very interesting trendline support that has been broken firstly here back at the start of June, and then we retested it, and more importantly, we even filled the gap, the minor gap at that area here from June 1st. Okay, so those gaps, whenever they are filled, especially Sunday gaps, they will usually cause a new reversal in price. And since then, we have seen a slight push to the upside. We stopped recently at this bullish level. You can also call it now as a temporary resistance, but as long as we are trading above this trendline support, I just still think that there is a chance for more upside. Unfortunately, this market will much easier move higher if there will be just these tensions will resume in the Middle East. Then of course unfortunately, gold will most likely print new highs, especially if you will see any kind of a significant sell-off on the stock markets, because normally this is seen as a safe haven, and it's been the case for the last several months. And looking at the Elliott wave structure, notice that that was only ABC drop, and we are still not at all-time highs. So at some point we obviously have to clear these highs out before we may step into the final stages of a fifth wave. But keep in mind that this uptrend still, maybe later this year could slow down. And also we've been discussing about silver. As you know, silver has moved into our FIB targets here around $36-37 after we spotted a completed correction down here with this recovery, impulsive recovery. And now looks like that we are deeply into the wave 5, but wave 5 is a motif wave, so it should be structured by 5 subwaves. That's not the case yet. So as long as we are trading above 33.70 or 34, or 34, yes, I just think that this trend is obviously here and alive, and could be much more attractive compared to gold if we consider that gold silver is turning lower. By the way, if you're new here on our YouTube channel, if you are just wondering about these analyses, we have wavetraders.com. It's our website where we share a lot of those analyses on a daily basis through the whole week. Now looking also on the S&P 500, so the S&P 500 reversed slightly lower, but still, I mean, it's totally normal maybe to see some kind of a pullback, because it was a, by the way, very strong, very nice push from the last couple of weeks, if not months, and we basically came either out of a triangle in a fourth wave, or maybe even this could be, if I delete this, changes this a little bit, could be even some kind of a wedge formation. Okay, so in either case, still I just would not be surprised that this sideways price action or somehow limited upside will be seen still in the next few weeks. Maybe going into the summer we will see this correction unfold. Of course, there could be easily a retest of the all-time highs before market really pulls back here. But whenever we see retracement, I think that that's going to be a new opportunity. So watch out for potential setbacks. I think that the very nice support is obviously here. If you look back, this was the previous swing high. It was also this swing low in that area, right? So we then broke to the upside here. We retested it as a support right here, and if we come once back into this area, I just would not be surprised if once again we try to stabilize down here. Also below that you have these gaps which very rarely will stay open, so these gaps also could be quite attractive when trying to identify potential key supports. So bottom line, stocks are bullish. There's a risk, yes, there is a risk. Is there buying opportunity? From my point of view, when I'm looking at these intraday cycles, definitely not. You want to have some deeper healthy correction first, maybe something similar like we have seen here. This would be very nice, because sometimes even wave 4 can be very similar in distance compared to the sub wave 2 of the same degree. Now looking at here at some of the single stocks, let me check my list if I forgot something. No, that's it. So looking at some of the single stocks, I will just update a few of them that we covered a few weeks back or a week back. So still looking at Apple here, a very nice potential bottom formation. Now looks like this price action that is chopping around from one side of the range to the other. I just still think it's very nice indication that we are in a correction. So watch out for super around 190. I think this could be quite attractive, interesting for a push to the upside, and there's a very nice gap that is still unfilled. Okay, so these gaps obviously could be as a resistance at some point, but before that it could be like a magnet. Looking at MD, this one has seen a push to a new swing highs here. So what we have now, we have 5 waves up from that lows, and we know that always when you see 5 waves from a new swing low or from a new swing high, this is indication that something is changing, because trend is sharp direction is clear. Okay, it's not some kind of a slow choppy price action here. It's a very clear directional move. So after these 5 waves up, you should be aware maybe of some pause, but then after this pause we will see more upside. And what I also like is that we have seen the overlap with the previous swing low down here. So this overlap just confirms the idea that this cannot be a wave 4 rally of some bearish trend. So this is the most important confirmation when you can get about potential bottom, when you have 5 waves up, or not bottom but of a completed correction, when you have 5 waves up and the overlap with the previous corrections. Now looking also at jpmorgan here, this one is very nice because we obviously had only 3 waves down from that highs, and we are still not at the highs, meaning that there is still room for more upside. So after some pullback, watch out for more gains. I think that's a pretty attractive, interesting support if you will see a retest of this level, because it was a very nice resistance here around 255. So I think that if you will see these levels once more, or maybe 245, I just think that this could be quite attractive region for further upside here. Looking further on nvidia, this one stayed in uptrend after latest earnings report, and looks like that we will try to attack new all-time highs here, which makes sense because after all we have a pretty nice and extended lag here. If you look at some of the fips, fib for extended wave 3, okay, so you can see that we are at the 161.8% extension. I don't know, why is this one here? 161.8% extension of wave 1 measured from end of wave 2. So that's the typical target for a wave 3, and maybe you will see some setback here, especially if we maybe broke this trend line support or channel. Then I think that will be a very nice consolidation that could give you a chance maybe to ride the next wave to the upside. But clearly we are targeting new all-time highs. The only question is if we get wave 4 from here, or maybe who knows, from a new all-time high. But certainly this looks like a very nice healthy uptrend that should stay in play as long as we are trading above 115. Now looking also at semiconductors, this one also is at the potential resistance here. We have 5 waves up, but even this one did not retest the highs yet. So obviously if you will see some setback in 3 waves or a reverse into a correction, of course don't get confused, it will be just temporary correction within uptrend, which obviously we expect to resume, and this resistance could be quite important for this week, around 260 to 70. Now if we go further on cryptocurrencies, Tom asked what about the Nasdaq. Well, Nasdaq 100 obviously is still in a very nice healthy uptrend here, very nice recovery that is now targeting new all-time highs. But again, don't get just too excited like most of the media. When you see at all-time highs, everyone will say, well, we are back in uptrend. Yes, but this recovery now lasts already more than 20%, right? So after that massive move, you can expect especially at those key levels, that market could slow down a little bit. And we even have a potential wedge formation ending diagonal here that once again is telling us that maybe there will be some pause. We'll see what kind of a pause will be. I mean, as I said earlier, I'm quite surprised that markets are holding up quite well compared to what is despite what is happening in the Middle East. And that's why I think that if these markets are doing fine, that even cryptocurrencies obviously will do well, because obviously they are not that sensitive to those geopolitical issues. But even cryptocurrencies will of course experience sharp drop and the sell-off if the stocks will do the same. But now we are clearly not seeing this kind of a price action here. So here at the bottom we have the total market cap with the Nasdaq 100, and we can clearly see very nice correlation here. So with that being said, looking at Bitcoin, I will look at the Bitcoin, Ethereum and Ripple. So looking at Bitcoin, we turned into a consolidation here, and this consolidation, I'm afraid it's not really finished yet, because corrections against the previous 5-wave rise will normally be structured by 3 legs, okay, when you have the simple structures like a zigzag. So that was probably a 5 waves down for a wave A, sharp wave B rally, and now in either scenario would expect 5 subwaves also down to wave C. Also, whenever I'm tracking a counter-trend movement consolidation against the previous 5-wave rise, I want to see prices to come back at least 38.2%. So this one is around 98,000, okay? But before that you have, or around there, you have also wave C that equals to wave A. So that area, in my opinion, could be quite interesting and attractive for potential stabilization if we see really another leg lower here. Below that you have the former wave 4 at the 50%. So this first support, as I said, maybe close to 100,000, and then you have what, 10% lower, slightly less, 7% lower, the second support that also could cap the downside here before market resumes even higher. Looking at the Ethereum, this one, as you know, has made a very nice comeback over the last few weeks, 8 weeks or so, and this clearly is bullish impulse. Okay, so I have said several times that whenever you have impulsive structure against the previous very strong drop, well, that's indication that something is changing. But again, not in a straight line. What we are tracking right now is a wave B consolidation. So because that was a pretty sharp sell-off, at some point even prices moved beyond this channel. I just think that we are in a 3-wave decline that could be even lower. So 38.2% is the first support, 2,300, and then what I would be watching is 2,100, because if you look back here, that was a very nice support at the start of the year. Then in March we retested it as a resistance, and if we go that deep, that would be a very attractive area right here once more. Looking at Ripple, this one unfortunately keeps moving sideways. Looks like that we need to have more sideways price action so that a lot of traders, investors that are involved in Ripple, that hold Ripple, will finally give up on the potential break higher. Okay, so that's unfortunately how the market functions, but longer is the sideways price action, more powerful and sharp and quick, can be moved out of a consolidation whenever this one will show up. And unfortunately, we are not at this stage yet. I mean, this could be an ongoing ABCDE pattern here in a 4th wave. So the good thing is that from the highs, I cannot count this as an impulse. So that's why I'm saying that this is correction sideways price pattern that could last. But eventually, once we'll see a push to the upside, just be careful that $4 maybe or around there, just this could be then the final leg of the higher degree sequence. So for now, Ripple still looks good. Short-term invalidation level obviously is around here, around 1.6 dollars. If we start breaking lower here, it really would depend what kind of a breakdown we are seeing. Is this just an intraday event, or maybe you see stable price action below that support trading for a few days? Then this would be a different story. But for now, it looks like that, at least to me, that this is just 4th wave part of an uptrend. Okay. Okay, traders, thank you very much for watching this webinar. If you have any kind of questions, make sure to join our community at wavetraders.com. We have a chat room there where you can ask questions for the markets. We also can cover for some individual markets as well. So visit us at wavetraders.com, and hope to see you soon in our chat room. Traders, good luck this week and trade well. Bye.